rising. And again, I think that it is the central banks and their purchasing that has certainly put a floor underneath the price of gold. But if I had a gun to my head, I would tell you that it should be a hell of a lot higher based upon what we see in the world right now.
Welcome to an illuminating conversation with a true expert in the field, Andy Schectman, the CEO of Miles Franklin. Today, we're taking a deep dive into the mesmerizing world of gold and silver markets, where the stories of wealth and value are written. In this video, we'll explore the intriguing movements that have captured the attention of investors worldwide. What's driving gold to the forefront, and what do these shifts mean for your investment strategy? So, fasten your seatbelts and get ready for a captivating exploration of precious metals, as we decode the narrative behind gold's prominent role in today's financial landscape.
Gold should be a whole hell of a lot higher than it is, Kaya. That's the truth of it, is that you have, over the last 18 months, not only the wealthiest, most well-funded, but also the most well-informed traders on the planet accumulating gold at record levels that no one's ever seen before, and that being the central banks. And when you have massive central bank purchasing, I think it certainly is one big reason why gold has held up well in the face of supposedly real rates being positive. And I would argue that that's really not true either, because first of all, gold and real rates are supposed to move inverse of each other. That's called Gibson's paradox. But I think the market understands that the inflation metrics by which the CPI gauges rising costs is flawed, that real interest rates are still negative. But what you are seeing, I think, is a realization. Look, for the first time in 45 years, U.S. treasuries now have a higher downside volatility than gold. Okay? And another way of saying that is that treasuries are no longer the safest alternative. And that's a very, very damning statement, because the treasury market has always been considered the safest, most liquid market on the planet. And when measured against performance, for the first time in 45 years, gold is now considered a safer, less volatile investment than U.S. treasuries. Think of the tier one revision of gold now for a moment, where prior to April of 2019, since the end of World War II, there's been one tier one reserve asset for central banks. That's been US dollars and US treasuries. Well, a couple of years ago in 2019, the BIS, the Bank of International Settlements, quietly reclassifies gold as the only other tier one reserve asset. And the acquisition of gold by the central banks using the Western market suppression, the paper market suppression, has enabled them, even with the suppression of paper, to drain the cupboards so much of investable silver that the price is rising. And again, I think that it is the central banks and their purchasing that has certainly put a floor underneath the price of gold. But if I had a gun to my head, I would tell you that it should be a hell of a lot higher based upon what we see in the world right now. And the fact that it's not is a testament to the Western ability to control the narrative until they can't. And I've been very fond of a term called logarithmic decay. Little by little by little by little by little by little, then bang, all at once. That's how Hemingway went broke. Little by little, then all at once. That's what you would experience if you were on the Niagara River approaching the falls. And so the bottom line is that this is a situation where the biggest money in the world understands where we're going. They are using the suppressed and massively over-leveraged Western paper market system to run cover for their repositioning and de-dollarizing, enough so that it is actually able to allow gold to quietly rise. I mean, look at it this way as well. Look at last week, gold hit its all-time high against the second and third largest economies in the world, in China and Japan. Gold is at all-time highs against most currencies. It's the fact that the dollar, being the cleanest shirt in the dirty laundry hamper, is blurring gold's role as being a safe haven asset in times of instability. The rest of the world understands that people in this country have been blinded by a dollar that is irrationally strong until it's not. And certainly seeing the fact that the first time in almost 50 years that gold is considered less volatile than the treasury market, this is a phenomenon that I think might wake up certainly the people in this country sooner than later. Yeah, but I think the problem in this country is that people think in terms of events like that, or days or moments. Oh, crap. They didn't issue their gold-backed currency that Jim Rickards talked about. And so what? I mean, the other group that talked about it was the embassy in Africa, the Russian embassy in Africa. So what? Jim was wrong. He'll be right. And I think that they realized that in order to issue a currency to gain legitimacy, you have to have a large enough block. 27 countries have applied to BRICS. There will be more and more countries that sign on before next year's meeting, substantial countries. And in order for a currency to work, think of Bitcoin. Well, what did everyone say Bitcoin needed to work? It needed adoption, mass adoption. So having 11 countries now in BRICS is certainly better than the 5 that there were prior to the August meeting, as we brought in 6 new countries. And if you look at the countries that were brought in, by the way, it's very obvious their thinking. You have Argentina, who's got the largest natural gas deposits in South America and controls the Straits of Magellan. You have United Arab Emirates, Saudi Arabia, Iran, who, big OPEC producers, huge oil producers. They, along with Egypt, controlling the Straits of Hormuz, massive oil pathway there. And you have Ethiopia, the largest, fastest growing economy in Africa, that is rich in minerals and metals and rare earth metals that are needed in battery operated vehicles and whatnot. They are building alliances methodically and doing it the right way. The Chinese think in terms of decades, we think in terms of minutes. And oh crap, they didn't sign it. Well, forget it. No, actually what happened was that they were tasked, first of all, they agreed to trade with one another in local currencies until next year. And you're seeing that over and over and over and over again. You're seeing these countries that are trading with one another using local currencies. And then they also said that they would come back next year. They were tasked, the finance ministers were tasked with going back to the drawing board, coming back with proposals to unite a common settlement currency. But when we talk in terms of what they're doing until then, look, and we talked about a few months ago, Brazil struck a deal with China, the second largest exporter of corn in the world. Brazil said, we'll sell you our corn and we'll take yuan for it. And now China is buying soybeans from Brazil and paying for it in yuan. And sales to American farmers has decreased by over 40% over the same period. They're not buying them from the U.S. farmers in dollars. They're buying them from Brazil and paying in yuan, and in the faith of this country. And I think that's beginning to erode. And you're seeing bond yields rise as a result of it. And I don't care all the movements or manipulations in the world that the Fed thinks that they can intervene in a market as big as the US bond market, when the rest of the world says we've had enough of your massive debt accumulation, we've had enough of your wars, enough of your hypocrisy, enough of your coercion, enough of your meddling. And by the way, you're going green. You don't need oil anymore from OPEC or Saudi Arabia. So we're all joining this new union that represents the majority of humanity, and it's not going green. And we don't like the way you're doing things anymore. So that's it. And I think it's a very simplistic way of saying that's kind of the big picture. And little by little by little by little, it changes until bang, the dollar is no longer the sole settlement currency and gold is backing a new system. So for those people who look away from gold because of this moment in time in August where the BRICS said, well, let's pause a little bit. We'll come back next year, do it the right way instead of shotgunning it the way the US does, reactionary. No, let's Let's do it the right way. Let's have a big enough group of people with enough influence and enough control of the global commodity structure where it really makes sense when we flip the switch. And so, if anything, this is a gift for those people who haven't yet realized where we are and where we're going. And I would simply say this, Kai, that if it were just price, fine. Okay, it doesn't make sense. It's counterintuitive, but that's exactly what they're doing. That's why they are taking advantage of the manipulated, over rehypothecated, over leveraged COMEX and LBMA price setting system that allows them to pickpocket the world's commodities. Whoever's dumb enough to let go of them at these prices. And that's why they're not bitching. Once they own it all, I think what they will do is they will move the price setting mechanism to one of two places, either Abu Dhabi and the United Arab Emirates, who has joined BRICS.
Thank you for joining us in this insightful journey through the dynamic world of gold and silver markets with Andy Schectman. If you found this video informative and engaging, don't forget to like and subscribe for more in-depth discussions on the ever-evolving landscape of precious metals. Stay informed, stay ahead, and keep an eye on the intricate tapestry of the financial world. Until our next conversation, may your investments shine bright and your financial future be secure.